In this video, I'm going to do the technical analysis of S&P 500 index for the week commencing from September 7th, 2021. This analysis will be in two parts. First, I will do the weekly analysis and then I will do the daily analysis. Through this, the weekly and daily will be able to get the most accurate results here. So first, I will start with the weekly analysis. I have given the links to my programs of stock market strategies, options trading strategies in the description of this video and also in the comment section. You can take a look. Okay, guys. So let's start with the weekly analysis first. This is the weekly chart, and these are the weekly candles. So if you look into this, the last candle, it's a bull candle, and last week the support and resistances changed as they were means for last couple of months the support and resistances were same, but because of the formation of this candle, the support and resistances are changed here. So the new resistance here is 4525, and then we have a good support here which is at you can say 4400. Then another support here at 4290, and then finally another one more support here, that is one of the critical support here at 4185. So these are the support and resistances. And one more thing again, support and resistances are not just one price. So if I say that the resistance is 4525, so it does not mean that the resistance is 4525. It means that there is a zone. Support and resistances are always the zones. Means the market will fluctuate, or means market may touch the lower or the higher ends of these zones. So if I say, because this is S&P 500 index, and if I say that the resistance is 4525, which means you can say like plus minus 30, plus minus 25, plus minus 35 is acceptable here. So if you want to make a zone, if you want to build a zone, then the upper layer of this the zone will be, it will be 4560, and the lower one will be 4490 or 4495. So that will be the zone, the resistance zone. We have this candle. This is the weekly chart, and these are the weekly candles. So this last candle, it's a bull candle, and this bull candle, it was formed after a very heavy bull candle. So it is a significator that yes, that there might be still some bull movement in the market. Now we need to see the momentum here in the for this the bull movement. We need to see the momentum. So we are going to do the technical analysis through the technical indicators here. But again, because the market is at very critical junction here, very critical junction here, 4500, then 4525, 4560, 4570, and I guess 4570 or 75 will be the last point here, or the last price here that the market would market may hit. So market is not expected to move towards 5000 until it holds above the zone, above this resistance zone, plus minus 25, plus minus 30, plus minus 35. That's it. And in Dow Jones we have plus minus 100 or plus minus 150. If we do the technical analysis here, then we have the moving averages. Okay, so through these moving averages, it is it is quite clear that there is a bull movement, because there is a clear fan out, and the market is on the bull side of the moving averages. It is supporting the moving average, the bull. The moving averages are supporting the bull trend. Okay, so there is a clear bull trend through this moving average. Ichimoku, yes, Ichimoku is also supporting the bull trend. And if we do the technical analysis through other technical indicators, if we consider the other technical indicators here, then we have stock RSI. This is the weekly chart. Remember, this is not the daily chart. This is the weekly chart. On the weekly chart, stock RSI is heavily bullish. Stock RSI is heavily bullish. MACD is marginally bullish, but MACD is also supporting the stock RSI here. And momentum, there is very little momentum that is supporting the bull trend. Okay, now the point of concern is the divergence. The divergence of the price from the mean and the divergence is clocking above 70. So this is the point of concern. Means though all of the technical indicators are saying that there is a clear bull trend, but the divergence from the mean, it is saying no. The market is because the divergence is more than 70, which means that the market is very unstable here, and market may fall anytime it may fall, because the divergence needs to be cooled down, and divergence is over 70, so it must come below 70 or below 65. Then only the market may try to move up. So anything can happen, and and whatever is going to happen, it will be clearly visible on Tuesday, that what the market is trying to do here. Okay, but the divergence is the problem on the weekly chart here, else all of the technical indicators are supporting the bull trend. Now let's move on to the daily chart. Now we are here on the daily chart. Okay, on this daily chart, if you look into this candle, last candle, okay, so this candle, the open price was 4532 and the closing price was 4535. This kind of candle, whenever this kind of candle is formed, it's a significator that there is still a bull movement, or the next candle is going to be means the next candle that is going to be formed, it will be a bull candle. But in this case, the problem is that the body of this candle, the red hollow candle, the body of this candle is not heavy. So which means that it may not fulfill the condition, or the next candle that is supposed to form here, it may or may not be a bull candle. So this candle and the subsequent candles will be clear through the technical analysis here. Okay, now one more thing, that these last two candles, okay, sorry, excluding this one. So that these last two candles, okay, they are the bull candles, and the closing of these candles was above the median of the resistance, which was 4527 or 4525. Okay, so so the closing was above the median of the resistance, means you can say that the resistance zone is here. Okay, this is the resistance zone here, and the market is in the resistance zone. It is neither or means it has neither crossed above the upper band of the resistance zone, and nor it has come down and formed and closed below the lower band of the resistance zone. Means this is the point where it is advised that you must not trade, that you must wait until you get a clear trend. So it is advised that you must wait for the market to give you a clear trend. Either the market must close above this zone, or must come below and must come below and must close below this the lower band. If we talk about the moving averages here, so moving averages are bullish. There is a clear fan out through these the moving averages are clearly bullish. Okay, and Ichimoku, okay, again it is bullish, means the market is bullish through moving averages and Ichimoku. Now we also have the Bollingers. Okay, so if I talk about the Bollingers, then it will give a clear picture here, because Bollinger bands, they work best whenever the market is sideways. So in this case, the market is sideways. So what we are going to see here is that if on Tuesday, particularly on Tuesday or Wednesday, you may see that the market may try to move up, and whenever the market moves up, it will find means it will hit the boundary of the Bollinger bands, means the upper band of the Bollinger band, which is at 4555. And after hitting the 4555, then for sure there are very heavy chances, more than 95% chances that the market will come down. So this is expected to happen here in the market. So the market, whenever the market comes down, it will find support here on this moving averages, and also on the mean of the Bollinger Band, okay, which is also the SMA here. Now, if we talk about other technical indicators, then we have okay. So we have stock RSI. Stock RSI is bullish, and it is heavily bullish. MACD is bullish, and again MACD is heavily bullish. Momentum, yes, market on the daily chart, market has very heavy momentum. Okay, divergence is almost 65, but it is not more than 70 as it was on the weekly chart. Okay, so all of the technical indicators here, all of the technical indicators, they are saying that there is a bull trend in the market. Okay, but and means on the daily chart and on the weekly chart, all of the technical indicators are saying there is a very clear bull trend here in the S&P 500 index. But there is a point of concern on the weekly chart, and that is the divergence. Okay, because it is clocking above 70, which means that the market may come down anytime, because whenever the market clocks above 70, 71, 72, okay, so market always comes down in order to cool down. So my advice here is that if you want to buy, then yes, you can buy, and you can wait for the market to hit this the upper band of the Bollinger Band. Whenever it hits the Bollinger Band, then exit from the market. Or the other strategy is that wait on Tuesday or Wednesday until you see that the market is hitting the upper boundary of the Bollinger the Bollinger Band, means the upper band of the Bollinger Band, which may also increase to 4560 or 4565. Okay, that is what I have mentioned on the weekly chart, that it will be the last price that the market may see, means that will be the highest ever price of the market, and then the market may come down. So whenever you see that the market is hitting the upper band of the Bollinger the Bollinger Band, then sell. In that case, I recommend to sell. Or you can buy put. If you are trading in options, then buy put. Put of you can say 4550. So put of 4550, and choose the monthly expiry here of September. Choose the monthly expiry, so that whenever the market comes down, you will get two times, at least two times, or maybe 1.5 or 1.8 times, or maybe three times. Okay. This was the thing here. Okay, guys. So this was the technical analysis of S&P 500 index for the week commencing from September 7th, 2021.